like to introduce our very special guest today, Janet Bannister. Janet has been a partner and managing partner at Real Ventures, one of Canada's preeminent venture capital firms. And prior to Real Ventures, Janet launched Kijiji.ca and grew it to become one of the most visited websites in Canada. Subsequently, she led Kijiji's global business, launching and accelerating growth in North America, Europe, and Asia. And as well, Janet spent 4 years at eBay, where she helped transform eBay from a collectibles market to a mainstream marketplace. And her other operating experiences, including founding and building a successful consulting business, serving as CEO of venture-backed startup, leading branding for Procter & Gamble, and consulting at McKinsey. And besides Janet's many professional achievements, she has also been active in the Canadian tech ecosystem, where she is a co-chair of the C100 and on the boards of Communitech in Waterloo and Vector Institute in Toronto. She's also an active advisor at 111 Creative Destruction Lab and the research board of the University Health Network. Janet has won numerous awards and recognitions, including Venture Capital Journal's Women's of Influence in Private Markets, PitchBook's Female Founders Investors to Know, and American Banker's Most Influential Women in Payments. Besides being an active mother, spouse, investor, advisor, Janet is also an accomplished runner and cyclist, having competed in triathlons around the world, and now also honorary chair of Princess Margaret's Ride to Conquer Cancer. Ladies and gentlemen, it gives me great pleasure to welcome the one and only Janet Bannister. Janet, thank you so much for joining us.
Thank you so much for having me. It is terrific to be here today.
All right. So besides humbling me with your level of fitness, I'm candidly amazed by the breadth of experiences in business. So you've gone from branding to consulting, corporate leader to entrepreneur, venture capital. Maybe take us all the way back. How did you originally get into the business world? And if there were any early experiences that perhaps shaped your path?
Yeah. So it's interesting. So my first exposure to business was actually, when I was 15 years old. And so as background, I grew up in Toronto, sort of middle-class family. And we were always told, hey, when we were growing up, when you get to a certain age, you're going to have to work in your summers to save money to pay for university. And so I'm the youngest of 4 kids. And so I remember the summer when I was 14 years old, my older siblings were all working. I thought, okay, next year I've got to get a job. And that summer I read some business books that were lying around the house, including the book Iacocca, which was about Lee Iacocca and how he turned Chrysler around.
Sure.
And as I read that story, I became fascinated by business. And I think the power of one person to change the trajectory of a company. And I thought, isn't that amazing? And I thought next summer, I want to get a job in the business world. And I want to learn something about business and just verify that, hey, this is what I want to do for my life. But then I thought, hey, nobody's going to hire me, a 15-year-old girl with no business experience, to do anything really meaty and worthwhile. So I thought, if I want to create that, if I want to have that experience, I've got to create it myself. And so I should start my own business. And so the sort of year leading up to that summer when I was 15 years old, I decided to start my own muffin business because I love to bake. And so I did all sorts of research, and the next summer I ran my own muffin business. I would get up at 1 or 2 o'clock in the morning, make 20 to 30 dozen muffins in our kitchen, and then deliver them to stores up and down Yonge Street by 8 o'clock in the morning, and then they would sell them. And so that was my first introduction to the business world.
Holy moly. Okay, 15-year-old waking up at 2 a.m. I really need to have you speak to my teenagers. But other than, clearly you were very self-motivated and driven. But when you reflect on those early years, who do you view as some of the greatest influences on your life then, and perhaps who you've become today?
So I think the number one influencer on my life was my father. He always believed that I could do anything I wanted to do. And so, for instance, when I came up with this idea and I told him, hey, Dad, next summer I want to start my own business, he was like, great, terrific. He taught me how to do an income statement and a balance sheet. He was a sales rep at IBM. So he taught me how to do a structured sales call. So I was selling my muffins into small stores, bakeries, small restaurants, bistros, things, butcher shops, etc. on Yonge Street. And so he taught me how to do a structured sales call. So there was that belief in me, but he also had huge, or I should say very high ethical standards. And I remember, for instance, one story. So I was a runner pretty well all through my life, but in high school on a cross-competitive team. And one year there was the Toronto Marathon. And so our running team was there. We were, helping out, giving out the water at the water station, giving out, water and food and stuff to the runners. And then afterwards, we went to sort of where they had the hall, and they had all these boxes, I'll never forget, of Snickers bars that were left over. So my friend and I were like, oh my gosh, look at all those boxes over there. So we thought we were so clever. We each grabbed a box of these, like Snicker bars, and took off. And we got home, and I told my father, I was like, Dad, you'll never forget, I got this whole box of Snicker bars. And he was just aghast. He was like, Janet, you stole those bars. Steal them, I just took them, they were there. Anyways, he was not impressed. And the next morning we had to return he said we can't return the Snicker bars. So we took them down to the food bank and had to give all our Snicker bars away. But I think that sort of taught me, like, hey, you know what? It's not necessarily about how big it is. It's about the principle and always keeping your ethics extremely high.
So how do we go from a muffin business on Yonge Street to a job at eBay? I mean, eBay was at the time one of the hottest companies in Silicon Valley. This is the early days of the internet transformation. How did that occur? How did that come?
So when I think back about the muffin business, as I said, and other experiences in my life, I think the biggest thing that I realized that summer was that a couple of things. First of all, that I loved the feeling of setting myself a goal or a target and not really knowing whether I could do it and then getting it done. It's same, as I said, I was a competitive athlete, the same sort of, I love that sort of putting the bar a little bit higher than I thought I could achieve and then achieving that. And I also realized, you can make things happen yourself. And so, as you say, so how that relates to how I got to Silicon Valley. So, went to business school, graduated, worked at Procter & Gamble, worked at McKinsey. And then in 1999, I thought, what, I've got to get into this tech world. The technology is exploding everywhere. It's 1999. I thought, I don't have my background was all was business, but not technology related. And I thought the longer I wait to get into the tech industry, the harder it's going to be. So I got to get there. And I also had this itch to, do something more entrepreneurial. So I put the two of those together, and I thought what I should be doing is I should be moving to Silicon Valley and joining a fast growing tech company. Great learning opportunity, etc. Now, of course, the problem was I had no US work visa. I knew nobody in Silicon Valley. I had no tech experience. But I thought, okay, that's not going to stop me. And so I thought, okay, the best way to go about this is to sort of a one-to-many approach is I am going to figure out who the top venture capital folks are in Silicon Valley, and then I'll contact them and they will have a portfolio of companies. And so I went online, did some research. Hey, here's the list of top 10 venture capital firms in Silicon Valley, went through the partners of each firm. And there was a firm on the list called Benchmark. And there was a guy there named Bob Cagle. And Bob's background was in consumer packaged goods and management consulting. And I thought, okay, this is my guy. His background, he is the same as mine. He's going to see some value in me. And so somehow I tracked down his contact info. And I phoned him up and left him a voicemail message. Of course, didn't answer, so then I sent him an email with, hey, here's who I am. Here's why, you should be talking to me, no response. A few days later, I call him back. A few days later, I email him. This goes on for like about 2 weeks. Finally, his assistant calls me and says, Janet, Bob has got all your messages. He has nothing for you. But I get chatting with his assistant and I'm like, but what, let me tell you a little bit about myself and why, I think that it might be appropriate and worthwhile for Bob to meet with me. So I guess finally I wore down and she says, I tell you what, Janet, next time you're in Silicon Valley, you let me know and I'll get you half an hour on Bob's calendar. I said, great. So that was on a Thursday. On the Monday, I called her up and said, hey, I'm going to be in Silicon Valley this week. Just wondering if I could get that meeting with Bob. So of course I manufactured a trip out to Silicon Valley, met with Bob, It turned out he was an absolute legend in Silicon Valley. And frankly, if I had known so much about him, I mean, once I got my meeting, I was like, okay, now it's time to really do my research on this guy. Found out he was this legend in Silicon Valley. And I thought, well, thank goodness I didn't know that beforehand, or I may not have had the courage to be phoning him up and saying, hey, Bob, this is Janet Bannister. Anyways, met with him. We had a great meeting. He had put the original money into eBay. He was like, Janet, you should join eBay. It's growing really quickly. I'm meeting with Meg Whitman tomorrow. I'm going to tell her that she's got to meet with you. And so the next day, my cell phone rings and the voice at the other end says, hey, Janet, this is Meg Whitman, who was heading eBay at the time. She said, Janet, this is Meg Whitman. I just got out of a meeting with Bob. I understand. I got to meet you and you're only in town for a couple of days. Can you come over to our office right now? I said, absolutely. Hopped in my car, was there in half an hour. And I guess the rest is history. A month later, I was living in Silicon Valley and working for eBay.
Wow. Okay. So that's, first of all, great story. Lessons in tenacity and all kinds of other things that are there. They're fascinating. But so you spent 4 years in the Valley, at Silicon Valley, and at eBay. And then, with all that excitement, you still chose to return to Canada and launch Kijiji. Why? How? Was it not enough of a entrepreneurial itch at eBay? What led to that?
Yeah. So, I loved working at eBay. So when I joined eBay, about 90% of the things bought and sold on eBay were collectibles. So things like coins, stamps, etc. And I was given the mandate for the other category, all the other categories. So clothing, home and garden, jewelry, books, etc. And really transforming eBay. And so we tripled or quadrupled that business year over year. Awesome experience. But what was interesting was the longer I spent in Silicon Valley, the more I realized that Canada was my home. And my husband is from Canada. And we thought, if we want to raise our family in Canada, we want to be back close. And so I actually became a much more patriotic Canadian living in the US, which was interesting and not something that I had anticipated. Anyway, so I said to eBay, hey, eBay, want to move back to Canada. And they said, okay, no problem. We will support you. And so they said, let's go, we'll figure out what you can do in Canada. So I said, great. Then they came back and they said, okay, Janet, the only role that's open at eBay Canada is head of product. So responsible for the ebay.ca website. So I had been running a $200 million business in the US. I was going back to, not only was it a smaller business, but I wasn't even running the business. It was just responsible for the website. And I thought, oh, goodness. But I thought, you know what, Janet, that's your ticket home. Go back and you will, figure it out once you get there. You can make this job into something bigger. So just like, this is where you want to go. So I moved back to Canada, actually in January, which people thought, are you crazy moving from California to Toronto in January? But anyways, we moved back. And the first thing I did was I said, hey, how's Canada doing relative to all the other countries around the world? And what I saw was that at eBay, in Canada, we were doing a great job of getting visitors to the site. So in terms of the percentage of online users who were going to eBay, Canada was actually one of the highest countries in the world. But in terms of our ability to convert those visitors to the site to actually do something, like bid on an item, buy an item, list an item, it was half that of every other country in the world. So I thought, okay, this is actually really interesting. Why is that? And how can we change the product to address that? And we did some things on the product that really didn't improve. And I dug into got to understand the market better, read research reports, and found out that actually Canadians spend a ton of time online, research online, but prefer to transact offline. Now, this was in 2004, but those dynamics still hold true today. It's, relative to other countries around the world. I thought, okay, given that dynamic, I'm not sure that we're going to change that dynamic in the short term. So we need to think about what is a better model that would work better for Canadians. And eBay was, I thought, eBay, what is a better model than the eBay model? And so I actually came up with 5 or 6 different models that we could do in a country where people are researching online and transacting offline. I narrowed it down. I said, we should be launching a classified site in Canada. You research online, you transact in person. Besides which, Canada, yes, it's a huge country with a small population, but we're actually one of the most urbanized countries in the world. And if you're going to have person-to-person classifieds, you need people in the same city. So I went to the eBay executives and I said, here's why eBay should be launching a classified site in Canada. Here's all this research. And they were like, yeah, well, no, Canada's not a priority and not sure about this. By the way, Craigslist is already there. Everybody knows it's a first mover advantage. No, we don't really like that idea. But I was really passionate about it and I didn't want to give up. So I kept doing some research. I found out that eBay was getting ready to launch a classified site in Europe. So I went back to the executives in California and I said, okay, like, lucky guys, like you're launching this site in Europe. Like, just give me the product, give me the product. I'll localize it for Canada. I'll launch it in Canada. So anyways, finally back and forth. They really didn't think it was going to work, but I think maybe they just got tired of me talking about it. So they said, okay, Janet, you go off, you do this on your own. And so hence launch Kijiji in Canada. It became one of the most visited sites in Canada. It became very successful. In fact, Canada was far and away the most successful classified site that eBay launched. So then eBay said, "Hey, Jan, can you come, like basically come back and step up and run the global Kijiji business and take it into other countries?"
Wow, that's incredible. By the way, just as like out of curiosity, what is it about Canada? And I'm here 18 years now, but what is it about Canada that we're sort of behind on trend from the US or other country? Any thought on that?
I think it's a combination of things. For one thing, I think in the early days, what's interesting is in the US is a much more, a higher percentage of the people are living in rural areas. So they were more apt to adopt to online shopping because they could get things that they otherwise couldn't get.
Right.
Also, the American consumers they did a lot more catalog shopping.
Mm-hmm.
And so if you think about it, particularly in the early days of the internet, catalog shopping very easily translated to online shopping,
right,
versus Canadians didn't do as much. So that was one reason. The other big factor is the value proposition for Canadian online shopping is not nearly as good. And I really realized this having lived in the US and come back. Now it's improved a lot in Canada, but simple example is Zappos shoes, right? And in the US, Zappos shoes, you could buy shoes online, free shipping either way, right? Free shipping to your house, free shipping if you want to return them. Zappos in Canada, it was $10 shipping either way. And so, or even, you look at the variety of items that you can buy online, and Canada is definitely catching up, but it's not nearly as deep as in the US. And as I said, I really noticed that back in 2000 when I moved from the US to Canada. I was like, oh my goodness, no wonder nobody shops online here. Like you just, you can't get the same things.
Yeah. Fascinating. Okay, so now you're here, you're running Kijiji, and then you pivot again, and then you move to Real Ventures, getting into early stage tech investing.
Yes.
Talk a little bit about that, and maybe we'll use that as a segue about how you viewed venture capital then versus how you viewed it today, and we'll get into some of those conversations. But let's just take us back to the Real Ventures decision.
Absolutely. So, the Real Ventures team approached me. They were looking to hire somebody in Toronto. So Real Ventures was started in 2007 by 3 guys in Montreal. They were looking to hire a partner in Toronto. They were looking to hire somebody with operating experience, ideally connections and networks in Silicon Valley. And, so we met through a mutual connection. And it was interesting. Initially, when they approached me, I thought, okay, very interesting, but I don't want to go into venture capital. Like, isn't venture capital all about like these guys who cut down the entrepreneurs and negotiate hard? And like, that doesn't sound like me. But I was intrigued enough by the idea that I started to dig in. And what I realized was that actually the most successful entrepreneurs, it's all about building deep, caring relationships with founders and adding value to those entrepreneurs. And so I ended up joining Real Ventures. And what I discovered was I absolutely love early stage investing. And, it's interesting, like you talk about, hey, Janet, you sort of did this and did this, but I feel as though everything that I've done positioned me very well for this stage. And what I mean by that is having that in consulting. So I worked for 4 years at McKinsey, 4 years running my own consulting business. And in some ways, being in venture capital is very much like consulting because you are working across multiple companies, multiple industries, coming in really as a thought partner and saying, hey, and you have to get up to speed very quickly on multiple different businesses and saying, hey, how can we take this company to the next level?
Mhm, mhm.
And then and hey, here's what worked over in this company in a totally different industry, maybe it will work over here. And yet it's also, you need that operating experience so that you can sit face to face with an entrepreneur and help them and build credibility with them and help them with very practical things like, okay, you've got to hire your first head of sales and this entrepreneur has never been in a sales role. What does great look like, right? And how do you think about that? Or how do you evaluate, like, how do you build out your financial model? Or like, again, it depends on the sophistication of the entrepreneur. So what I found was that I absolutely loved venture investing, and that I felt that everything that I had done up until that stage set me up well for that.
Cool. And now, just before we go dive deeper into kind of the strategies and how to execute, when you look at the macro picture of the venture investing world today, what are some of the key themes or trends that you're seeing in the market right now?
So I think overall, not surprisingly, we're seeing much more focus on unit economics, path to profitability, no longer a growth at all costs. And, to give some examples, it's, I think this maybe paints a picture very clearly. So we have a company, it's called @Venue. Been in our portfolio. I've been on the board for 9 years. Basically what the company does is it provides software and hardware for the sale of merchandise at live events. So think about concerts, festivals, sporting events, etc. It is their software and their hardware that is powering the sale of running the payments through, giving the analytics, things like that. Because there are unique requirements when you go into if you're a concert, say Taylor Swift, the big concert that's going on now, rolling in city after city. And so anyways, that's what the company does. It is, Real Ventures invested about 9 years ago. The company had not raised any more money. It operated cash flow positive. It was growing at about 50 to 60% year over year, cash flow positive. It was a company that for years could not raise any capital. Could not raise any capital in the venture capital world because everybody in Silicon Valley said, not growing fast enough, basically not interesting enough. Like, this is not, like, I would rather invest in some new age technology, something new. Like, this is not interesting, not fast enough growth. Now the founders were like, okay, that's fine. Like, we're going to keep doing our stuff. And so they kept going along. And then, of course, this new age, things happened in the market. Well, first of all, they had to go get through COVID. They got through COVID. And then with the market dynamics, interestingly, let me see, about 9 months ago, they raised capital. They had 12 term sheets that wanted to raise that wanted to invest in the company. They went from no interest to 12 investors wanted to, PE/growth venture capital firms wanted to invest. And so that's just, illustrates the example of what investors are looking for, the dynamics, right? It's much, because now it's like, oh my gosh, this is a business that's growing at 40 to 50% year over year, EBITDA positive, growing margins, growing top line and bottom line. Sounds terrific. Like,
it's like private equity at this point. Yeah,
it's private equity, right? And so anyways, that is sort of one example of how things have changed in the market.
What else are you seeing?
What else has changed?
What else are you seeing?
I think the other thing that I have noticed is it's a different breed of entrepreneurs that are starting businesses. And I think that this will make 2023 and 2024 great vintage years for investors. And the reason is because the entrepreneurs who are starting businesses now generally are more experienced. They've sort of got more scars on them. Their business plan is much more thought out. They are thinking from day one, how am I going to get to profitability? How much is it going to cost me to get a customer? They're thinking about how much am I going to make? Like, all those basic things, they are thinking about it from day one. They're doing a lot more research up front. I was, back in 2021, I remember meeting with entrepreneurs and they like half-baked ideas, really half-baked ideas. First there's nothing wrong with first-time entrepreneurs. I mean, we could talk about that later, but limited experience. And they'd say, yeah, you know what? We're raising at a $20 million valuation, and then we're going to launch our product. And then in a year's time, we're going to go out down to the valley and raise, $30 million at a $100 million valuation. And I'd just be sitting there thinking, what? But they just thought money was falling from the sky, and they thought this is easy. And that is not a good situation to be in, right? From a market standpoint. So I think, as I said, we are seeing a much more resilient, realistic type of founder today in the market.
And like, I guess the effect of the meltdown in valuations that we have seen, other than higher quality companies and more thoughtful entrepreneurs, any other effects on the ecosystem that we as investors may not be considering? Anything else that's kind of like a second order effect of what we've seen in the venture space?
I mean, I think not surprisingly, valuations are coming down. So if you're a first-time investor, that's good. I think the ability to get for these companies to hire strong people and the salaries is much more attractive. So for instance, a couple of years ago, one of the biggest factors limiting companies' growth was access to people. They couldn't get people. They couldn't get engineers fast enough to grow. Now that has changed, and so it's much easier to hire superstars, or I should say, much easier to hire great talent and to pay them a reasonable price. So I think that is another secondary benefit. I think that the march towards technology, like, that's not going to change, right? In terms of technology evolution. What I mean by that is, hey, more, people using online, like the development of technology, the marching forward of that, and the long term is not going to change. And so when I think as an investor today about, hey, I'm investing in business, I'm investing in companies that I think are going to be massive companies in 8 to 10 years, the march, particularly I'm talking about business to business software adoption, like, yes, it will hiccup a little bit, but we're on this train that we've been on for the last 50 years, right? In terms of technology changing all aspects of our lives, and that underlying thing will not change.
Are there any specific technologies or that you're sort of more focused or interested in, or how are you thinking about that ecosystem? Because there's so many, whether it's AI, whether it's blockchain, whether how do you think about kind of the emerging world of technology?
So where I focus on investing is business to business software.
Mm-hmm.
And I focus on companies that have a product in market and initial customers, just because I think that significantly de-risks it.
Mm-hmm.
I think one of the frameworks, like when you think about, hey, the evolving aspect of technology, right? So you've got on the one end really deep tech, like sort of to map out the landscape of technology investing. You've got deep tech on one side, and what I would refer to deep tech is really pushing the boundaries of science. So in there, for instance, quantum computing, new chip development, things like that, like really advanced, some very advanced things in terms of biomedical research, things like that.
Mm-hmm.
Life sciences. Then you have, okay, so that's a really deep. Then you have what I would call is, technology at the core, where businesses are being created by leveraging technology. So an example of this, for instance, we're in a Real Ventures, it's in a company called MindBridge. They're using AI to identify fraud. So, they're basically AI-driven auditing technology that is much more effective than human beings. And they are, so then the next step is businesses that exist purely because of the technology that they are developing. Or we are also invested in a company called Canvas that uses AI to improve they sell into industrial manufacturers and use AI to improve the process. So that's sort of like this, the next wave. And then the third wave is almost applied technology. And it's businesses that exist and they're using technology, but technology in and of itself is not a core. And so, for instance, an example like this is e-commerce businesses as an example, where I would say, yeah, you know what, they're using technology for sure. But technology is not, what really matters for their success. They're not developing technology, they're more applying technology to what they do.
Right.
So I think about it, the range. In terms of where I'm particularly interested is more really the second category, where I think it's, hey, how can we use technology to deliver significantly better results to businesses
Right.
and software?
Interesting. Here's, I know, thank you for that context. Okay, so
Okay.
let's take it to where you are now. And I understand after 9 years of being at Real Ventures, and even some years as the managing partner of the firm, you kind of decided to leave and start out on your own. Again, what led to that decision? Tell us a little bit about it, and perhaps what's unique about the approach that you're contemplating.
Absolutely. So yeah, so that's right. So I have left. I announced at the end of the summer that I'm leaving Real Ventures after spending about 9 years there, including 3 years as managing partner. And I think it was a combination of two things. One was, I am an entrepreneur at heart, and I love to create businesses, but that's, you don't create a business just for the sake of creating business. But more importantly, I saw a different way of doing venture capital, and a way that, and we can get into that, but I saw, there's an opportunity here. And I think specifically, actually, I'll tie right into it, is what I see is a couple of things in the market. First of all, if you think about early stage investing, most investors will say, the most important thing that we think about when we invest in a company is the founders. And then they will invest in the company and put all their energy towards building the business as opposed to helping the founder develop. And what I mean by that is, you look at the vast majority of venture capital firms, whether it's Andreessen is probably Andreessen Horowitz is probably the partner, poster child for this, or any of the firms. What they are doing is they are saying, we're going to hire people to help you with talent. We're going to help you to hire people to help with your marketing, business development. We'll help you with da. But they don't put their resources against helping founders. And what I have seen over 10 years of working with startups, literally seen hundreds of companies, is the most important factor in terms of whether a company is going to be successful or not are the founders. And it's interesting, so for instance, when I think about our most successful companies, the vast majority of them are doing something that is different from what they started out doing. But they were successful because the founders were able to grow and learn, and they were able to pivot, and they had the awareness to say, oh, wait a minute, this isn't working. Let's sort of pivot it this way. Right. And yes, that is absolutely the business, but it also requires founders to have that self-recognition, to be able to say, to know when to say, I should keep persisting on this, or I should pivot. And it also requires founders. I mean, nobody builds a huge business by themselves. So if a founder does not have the skills to attract other people and to motivate those people, then they'll never be successful. And, a lot of people say, well, don't you just look for those skills at the beginning? And I would say, yes, but the analogy is an Olympic athlete. And if you want, yes, you've got to pick these, if you want to train the next Olympic gold medalist, yes, you need to make sure that they have the raw talent, but you also need to provide them with that coaching and training. And so what we're doing with my new firm is sort of flipping the script a little bit and saying, we're putting all that energy into founder development and doing some very specific things, such as, paying for all CEOs to have an executive coach and other things like that.
Yeah, wow, that's fascinating. So could we just go back to, I like that analogy, the Olympic analogy. How do you develop conviction around them being an Olympic athlete? In other words, how do you develop the confidence of their caliber and quality and character of the founder, knowing that they still need development down the road, but just what has proven to work for you?
Yeah, it's interesting. And I'll start off with something that's proven not to work. Is when I got into this business years ago, I thought, okay, I know how to do this. I thought, I'm not going to invest in any sort of, 22, 23-year-old right out of university, because why would I choose to invest in those people? I'm going to choose to invest in people who have decades of experience, because I get to choose who I invest in. And what I found was actually the years of experience are not indicative of whether a founder is going to be successful or not.
Hmm.
And if you sort of step back and say, hey, yeah, you look at a lot of the most successful companies, tech companies, were founded, you can argue whether they're doing good or not, but Facebook, Google, are probably the prime examples of companies that were founded by very young folks. What I realized is the key factors are the ability of those founders to learn and grow and iterate too quickly. Because when you're a startup, you've got to test things. And so one of the ways that I measure that is I meet with founders every week for multiple weeks. And you start to understand, okay, what are you doing this week? And then they will say, hey, and do they are they very clear in terms of, this is what our objective is. This is our single areas of focus. And when you meet with them next week, have they moved that needle, that pebble forward? Have they made progress? Do they understand? Yes, we made progress. And I'll give a very specific example. We invested in a company called Partner Stack, founded by an awesome founder. His name's Bryn Jones, basically more or less right out of university. I met with him every single week. I met with him. Before we invested, he would be like, hey, Janet, we know we need to reduce the onboarding time. It's 90 days. We need to get it down to 4 days, next week. Janet, it was 90 days. It's now down to 60 days because we did X, Y, and Z. It's not good enough. We're going to do A, B, and C. Next week, just meticulously driving towards improvement. So that is definitely one thing that, you can very quickly see what is their mindset. You look at who are they talking to? Who are they outreaching to, right? Is this a founder who goes out and finds the answer?
Right.
I remember listening to Toby from Shopify talk once, and he said, I don't care whether you know the answer. I care what do you do when you don't know the answer? And it's how do entrepreneurs respond to that question? So for instance, do they just sort of figure that, hey, they know everything?
Yeah.
Or do they say, no, you know what, actually, I've never encountered this before. So I'm going to proactively go out and seek advice and talk to other founders or other experts. And I want to get smart and then come back and say, you know what, actually, Janet, I talked to this person, I talked to that person, and, compile all these thoughts. And based on that, this is what I think we should do.
Interesting. So now, just coming back to Staircase for a moment, you're presumably currently fundraising.
Yes.
Assuming that's the case, and I guess this is somewhat new for your own firm, what have you learned through that process? What has been surprising? Is there any implications of, let me actually come back to that. What have you learned through this process?
So I think, so Staircase Ventures, that's the name of my new firm. What I have learned is that a lot of investors recognize that this is now a great time to invest. Yes, some people are scared off by the markets, but I'm also, a lot of investors realize this is a great time to be investing in a new fund because the return profiles are very strong at this point. I've also seen that, similar to sort of what I talked about in terms of entrepreneurs, and it's a more gritty type of entrepreneur. I think what investors are looking for investors, for venture and for funds that are run by people who have the experience, who know how to handle these different situations. I would say overall, I've been, pleasantly surprised by how quickly my fundraising is going. Actually, 2 of your clients have signed up, which is awesome. So I am, I'm thrilled with the positive reception that I have received in the market. Which, I think you go into these things, any entrepreneurial adventure where you have to have a certain level of confidence or you'll never do it. And yet at the same time, you have I know I do, a certain level of fear, which drives you every day to work super hard. And so it's fun when you think, yeah, you know what, actually, I am going to do this.
And does the fact that you're a female GP, obviously there's a growing population of female venture capitalists, but still relatively smaller. Any unique challenges or perhaps opportunities that come with the territory?
Yeah, I'm an optimist, so I always look at things from the bright side. I will give you, I remember we had one time there was a principal in our principal who worked at Real Ventures in Toronto, and so it's sort of a junior partner and me. And we both started about the same time. And after about 3 or 4 months, he said, Janet, like, just get asked out all the time for drinks. Like, I just can't keep, like, he goes, and I'm like, oh, really? He's like, oh yeah, like, other VCs and founders, and they're always asking me out for drinks. Like, I could go out for drinks every night. I looked at him and I said, I have never been asked out for drinks once. And I said, I guess, now maybe it's my personality, I don't know. But I thought, I guess people are like a little bit hesitant. Like, I don't want to ask a woman out for drinks. Like, you never know about that. But it didn't bother me. I was like, whatever, that's okay. Like, I'm fine to go home and see my son for dinner and go to bed early and get up early the next morning, and I will build my relationships other ways. So I think for one thing, I don't let things like that bother me. I remember being in Europe, actually, at an event for senior venture capital folks. And I walked into the room, and I kid you not, it was a sea of men all wearing blue suits. And they all looked very similar. My gosh, this is like the blue suit convention. And they were all there, and there were no other women. I just thought, okay, here we go. This is going to be great, because everybody's going to go and meet probably 20 people, 25 people tonight. And tomorrow morning, they're going to wake up and they won't be able to remember who's Joe and who's this. But you know what? If I'm the only woman here, or one of a handful, I'm going to stand out, and they're going to remember me when I follow up on email. So I just like view it as, it is what it is, and I'm going to make the most of it.
Mhm.
So that's the way I view it. I suppose like everybody, you've had experiences where you think, oh, am I being judged based on my gender? But I think I push those thoughts away, because I think I don't ever want to use that as an excuse.
Yeah. No, I hear you. I hear you.
And
And
I
so-
always want to be thinking, what can I do for my own personal development?
And so, like on the personal development front, and again, you've talked about how important the velocity of learning is to selecting the individuals. When you think about some of the mulligans, the slip-ups, the mistakes that you've made in your career, which ones do you kind of reflect on as being most instructive or most transformative that you've made along the way?
Yeah, I think when I think about things like, hey, you know what, if I were to go back, or the things that I feel maybe badly about or wish that it had gone, they're all about people. And what I mean by that is, there's companies that we had looked at and maybe we should have invested in, but there's not too many. And those ones, you can't expect, frankly, there's not too many. And, those you learn from, and you think, okay, why didn't I invest in that company, and how can I avoid making that mistake in the future? But the things that really stick with me, and they're primarily earlier in my career, when I think about situations, when I was a young manager and, for instance, firing somebody, and I still think back to, like, I'm not sure I handled that in the right way. Certainly I would handle it differently today.
Mhm.
And so it's the people decisions and how I act with people that, and particularly earlier in my career, when I think I didn't really handle that situation very well, that I have the most regrets over.
And so, Janet, just on that note, I mean, I had a colleague that was in my office a little earlier asking me, how would I have approached things differently 20 years ago? And so if we could go a little deeper on that, on the people situation, what do you think it would have been great for you if you're speaking to sort of either younger entrepreneurs or younger VCs or younger business leaders? You're young yourself, to be clear, but a little bit younger still, that you sort of wish you knew when you started out a little early in your career?
I think it's the importance of people relationships. And it's what I value it so much now. And I don't think I valued it as much when I was younger. Well, in fact, I know I didn't. When I was younger, I was this hungry, want to achieve, I want to accomplish, I want to do, this is what I want. And I would push people very hard to do things, to get, to achieve the results that I was working towards. And what I've come to see now is actually the end of the day, you can't do anything without people around you.
Mhm. Mhm.
And particularly the venture capital business, it's all about people. And it amazes me. It never ceases to amaze me, even though I continue to be amazed by it, by how, if you go out of your way and help people with no expectation of anything in return, how it comes back to you.
Yeah.
And whether that's charitable or whether, I make a big effort to help people in the community, to help founders. If I meet a founder and we can't invest for whatever reason, I try to introduce them to other investors that might be suitable. Or if we pass on an investment, I genuinely want that founder to be successful.
Right.
And I will even, there's many examples. I can think of Andrew Graham, who founded Borewell. I mean, we looked at investing in that, we passed. But I have, introduced him to other business opportunities for him, or introduced him to talent that might be helpful for him, because I genuinely care about him. He's a great human being.
Yeah.
And I just find by taking that approach, not only are you more successful, but it's more rewarding.
Yeah, no, I couldn't agree with you more. I mean, in fact, you're a role model to so many. You have a reputation in the industry, someone that's giving, always making introductions, offering helping hands, supporting charities, and just also being accessible to the ecosystem. I guess that brings up another question, which is, how do you straddle that balance? Because you're also incredibly efficient. You wake up, God knows how early in the morning, regimented, rigorous. And then at the same time, there's all of these demands on your time that are coming out from left field all the time. How do you balance these diametrically opposite agendas?
Yeah, it's a great question. I don't think I've got it figured out by any stretch, but I am always prioritizing and always asking myself, is this a unique thing that I can uniquely do? And what I mean by that is, if it's an ask for help and I think, well, so-and-so could do this just as well, so then I'll pass that off, right? So for instance, I want you to meet with this entrepreneur, and I think, what, I actually don't think I can add any unique value. Then I may not, but I look for, basically it's leverage, right? Where can I spend my time and energy that I'm going to have the most impact on people or on situations? And I also focus on doing things that give me energy, right? And so helping people or introducing people to, I absolutely love making connection with two different people who can mutually help each other.
Yeah.
Like, I just think, hey, like, isn't that awesome? Like, I just have to send a couple of emails and I introduce them, and then they go off and they help each other. Like, what could that, to me, that's a low lift and it gives me energy. And so I think about that. How can I, and if I can do things that give me energy, then that gives me more energy to keep going to do other things. And then again,
No, it's great. One thing I actually want to come back to is thinking about what you said earlier. And it's funny because you hear a lot of venture capitalists, when they talk about their mistakes, they talk about the mistakes, that the opportunities they missed. When you talk to private equity or real estate operators, they talk about their mistakes as the things that they did. Maybe you could just elaborate on that and the difference there. And also, just broadly, how do you think about risks? How do you think about managing or handicapping them in the portfolio? If I could just ask you to riff on those two things.
Yeah. It's interesting the way venture capitalists, you ask them a general question about mistakes, and they immediately, yeah, absolutely, they will talk about the investments that they missed. I have a very, I guess my perspective is that success is not limited. And what I mean is, success is not defined. And what I mean by that is, just because I missed investing in a great company doesn't mean that there's not all sorts of other great companies to invest in, right? And so if I pass on a company, I want them to be successful, right? And some VCs, they don't think like that. They're like, well, no, I don't want them to be successful because then I look like an idiot. I'm like, yeah, but who cares? Like, don't worry about that. Like, if that company is successful, assuming it's not competing against your company, if that company is a chip company and you're going after a business-to-business software company, like, good for them. I hope they are successful. But I think, sorry, I lost the train of thought. But in terms of, the question was, how do I think about
Managing risk or
managing risk. Absolutely. So I think about in having a portfolio. So some investors, I would say some investors will say, hey, we're fintech focused, or, back several years ago, they were e-commerce focused. I think about, yes, business to business software, but I will invest across different industries, different types of companies to diversify that risk. So I do think about it that way, in terms of having a diversified portfolio. Also thinking about, so just in terms of the fund structure, is 50% of the money is invested in initial and 50% follow on, so that you can invest more money into the companies that have more traction. So again, that so only half of the capital is going in at the earliest stage. It's another way I think about managing risk.
Okay, fantastic. Just maybe one or two more questions we'll have time for here is just, obviously, first of all, I'd love to hear, you've done so many wonderful things, built businesses, contributed to corporations, expanded, and helped so many entrepreneurs and people along the way. I'd be curious what legacy means to you. And if it could sum it up as to what would you want to see written on your tombstone. I don't even know if they still write on tombstones, like messages that they used to do in the old days, but just curious, what would that epitaph read? Like, how would you want to be remembered?
So I think about this a lot. What I want to be remembered is somebody who helps other people achieve their objectives or achieve their goals, achieve their dreams. And it's very different. Again, when I was younger, I was very focused on what I want to achieve. I want to achieve this. I want to achieve that. And now it's like, actually, it just doesn't, it's not as important. What gets me excited and gets me out of bed every day is seeing other people succeed. And I think it's why I do what I do, why I'm starting this fund and the way that it will work, is it's all about, I get excited when other people succeed. And I think and whatever success means to them, and if that means pursuing their passion and building a business, that's great. If I can help people at a core, and I think of my founders as very much holistic people, and how can I help them and provide a lot of coaching to them in all aspects of their life. But if I can help people, as I said, whether my founders, whether, when people come up to me and say, Janet, you inspired me, or I heard you talk, or, I met with you 2 years ago and you changed how I'm doing things. To me, that's the best thing in the world. And that's what I want to do is have an impact on other people, make other people's lives, more fulfilling.
Janet, that was fabulous. Can't thank you enough for, maybe we'll end it there, because that was an inspiring message to conclude on. And I really can't thank you enough for joining us, for sharing your incredible insights and being so gracious with your time and your wisdom. So really appreciate it, and hope we could do it again soon.
Mo, thank you so much for having me. Really appreciate it.